Welcome to Infront ASA Q2 2019 results. With us today, we have CEO Christian Nesbæk and CFO Max Hofer. Over to Oslo.
Hello, good morning, and welcome to this presentation, and thanks for attending. So, this time we deliver a really strong quarter where we are delivering both on the M&A strategy and the underlying revenue growth. So the acquisition of VVD in Germany was completed and has secured our top 3 financial terminal provider position in Europe. The revenue is up 105 million, up 56% from 68 million in Q2 2018. So this includes Market Connect, the Market Connect acquisition in Italy, but it does not include VVD. And the growth is, of course, driven by the Market Connect acquisition, but we have also quite strong organic growth. And the adjusted EBITDA is ended up at 20 million compared to 10 million year on year. Customer base doubled year on year, measured by paying terminals and solution users after we included Infront Italy or Market Connect as that we required. So we finalized the VVD acquisition in July this summer. The final purchase price was 130 million euros. This was financed through a 4-year 105 million bond, and we had an oversubscribed subscription right in June. As I mentioned, the VVD numbers are not in the Q2 numbers, but will be a part of the next reporting, the Q3. So after the acquisition of VVD, we will be the leading European provider of financial terminals and market data. We will have a number 2 position after Bloomberg in the Nordic. So this is a non-European player, and we will have a more diversified revenue base now with 90,000 professional users split on 3,600 customers, a broader product offering and more markets. It's a highly complementary operation with significant cross and upselling opportunities. We will be exposed to the growing regulatory technology segment and wealth and asset segment markets. We will have more than 500 employees in 14 countries. And this will give us a fantastic platform to grow across Europe and in other markets. The integration of Infront and VVD is underway. So we have set up an integration team and started working on all elements of the integration. The first thing we will do, and the lowest hanging fruit, is to consolidate data feeds. This will give us an annual cost saving of 20 million NOK. And we have good traction there. Further, we estimate to have a cost saving of 60 to 85 million NOK over the next years. So this will take a little longer time to realize, but it will happen. So our strategy is still the same. We have reached our goal a lot earlier than we expected. So we might need to change that now. But we are still the way to grow is still the same. So we will we continue to grow on the number of terminal users in the Nordic and has increased our income from the solution business. 2, we see an uptick of leads coming in from outside of Nordic and an increased success rate in the sales cases. Our offices outside the Nordics are picking up speed. 3, having a user-friendly, function-rich, and content-wise solution is our top priority, and we continue to invest heavily in product development. 4, in the long term, we will continue to do acquisitions. So, as I mentioned earlier, the number of paying professional users has more than doubled due to the acquisition of Market Connect in Italy. Web technology agreements continue to grow through new clients in the Nordic, and revenue in this segment is 81.8 million, so it's up 82% year on year. We also have some growth for analytics and other, and overall stable development for news. So the news division revenue is more or less flat. 85% of the segment revenue is in Swedish krona. Direkt again voted best financial newswire in Sweden. And we see strong interest for the new Inside Direkt news service in Sweden. And in Norway, the news agency Infront show a good momentum launching new products. The analytics and other division revenue increased with 11%. It's mainly organic growth. And the analytics platform now report quarterly and annually earnings estimates for around 1,200 companies across Europe. And now over to our CFO, Max Hofer, to go a little bit in details on the financial data. Thank you.
Thank you, Christian. I will now continue with the financial review for the second quarter. As you have already seen, the second quarter has been truly exceptional for Infront. Not only did we sign the VWD transaction, and through that we are becoming the number 3 player in Europe, but also we have seen record revenues and EBITDA in the quarter. As our business is based on long-standing customer relationships and subscriptions, 99% of our revenue was actually recurring, of course helping us with respect to visibility of the business going forward. The adjusted EBITDA of 20.8 million compares to 10.7 million last year, and the margin of 19.7% is very positive as well, as we see that our efforts to consolidate data supplies and to integrate the Italian business seeing the first results. In the second quarter 2019, the group's revenues recorded at 105.9 million Norwegian crowns. This compares to 68.1 million last year. And of course, the majority of this is driven by the acquisition of the Italian business. Furthermore, we also record healthy organic growth in the high single digits. And this is coming from both the web technology solutions, but also other products, and our terminal product as well is selling well. And we have been able to also upgrade a significant amount of users to our improved and newer product suites as well. The gross margin is slowly ticking up again after the hit of the inclusion of the Italian business. And here it's clear that we can see the effects of the data consolidation efforts going on. And now we record a gross margin of 61.6%. The adjusted OPEX came in at 85.1 million Norwegian crowns compared to 57.4 last year. And of course, here as well, we see the impact of the Italian business. I also want to point out that we have been able to stabilize the cost development between Q1 and Q2. And of course, this bodes well for the ongoing future of the EBITDA and profitability development. As you can see, in the second quarter, the EBITDA came in at 20.8 million Norwegian crowns, and the margin, as mentioned, was at almost 20%. Looking at the revenue development per region, we can see a slight decrease in revenue in Norway year on year. This is due to the loss of a contract in a non-core business, and the rest of the business is very stable. In Sweden, we see an increase to 37.8 million, and this is driven by the inclusion of new web technology solutions, as well as organic growth in core products. Other regions now include Italy, and it has seen, of course, a very high increase year on year and a stable development quarter on quarter. Looking at the revenues per segment, terminals and solutions now includes as well Italy, and we have seen a stable development quarter on quarter. And the other divisions, news and analytics, have performed stable as well. In total, of course, a good increase year on year and a slight increase also quarter on quarter. At the end of Q2, the company was flush with cash. Of course, this is the effect of our fundraising efforts and the bond that has been raised, the 105 million euro bond, and as well the new equity that we raised of 242 million Norwegian crowns. The effect of that can be seen in the cash flow from financing, which was at around 1.2 billion Norwegian crowns. And these proceeds were then used in Q3 in the closing of the transaction. The cash flow from operations was at 1.1 million, as positive operating cash flow across the regions was offset basically by seasonality effects in Italy. In Italy, our company invoices a majority of its revenues once a year, and that happens in Q2, at the end of Q2. It has to be said that all of this invoicing is upfront invoicing, and hence we can very clearly also manage those receivables and those customer relationships. The cash flow from investments was negative 16.6 million, relating mostly to development of future products and also some investments in PP&E. In summary, and as also mentioned by Christian, Infront has now achieved its target of becoming the leading European provider of financial information to finance professionals. And this is due to our acquisitions of Market Connect and VWD. Our focus going forward now will be to continue our integration efforts to capture the significant synergies from these transactions. So far, our experience is that the integration is going well. We have identified significant cost savings and also secured a big chunk of the data cost savings that we had identified initially. The group is also seeing continued revenue growth based on recurring subscriptions. As we see a healthy demand for our products, and we have been able to increase the number of users and are able to also sell at higher price points. The sales pipeline remains solid across all regions, as we now also see, of course, that with the inclusion of VWD, we should be able to increase our cross and upselling efforts. All of this supports very strongly our long-term ambitions regarding organic growth. Finally, we also see continued attractive M&A opportunities in the market, and we also intend to pursue those selectively. Thanks again for your continued interest, and we will be back with Q3 on November 14th.